Welcome back. Still tuned in to closing trades at 11,172. The pressure continues for the markets, and you've got the Sensex off by about 450 plus points. Names like Reddington, Colte Patil, Lupin, Phoenix Mills, City Union Bank, though, they're managing to buck the general trend. Chakri Lokapriya as well joining in on the show. Chakri, hi there. Good afternoon. It's been a week that's been peppered with a whole host of numbers. Prominent among the lot, the auto sector that has been delivering their Q1 earnings. What have been your key takeaways based on the kind of volume growth, the kind of earnings, margin picture, and even commentary from the auto sector?
Good afternoon. And I think, the read is auto and beyond auto, because if you look at the economies, probably the various sectors which are contributing towards the auto. If you take Ashok Leyland as an example, year-over-year sales were down 70-80%. The company's utilizations, capacity utilizations, is running at about 40-50%. So that's pretty much the trend for the auto industry. It kind of gives you a mirror into how the economy is doing. Now, then the question becomes that where do we go from here? And, pre-COVID, they were all operating at probably about 85% capacity utilization. So, so that is likely to happen as we go out a few quarters. This is, mind you, even without any additional stimulus measures announced that may be announced by the government. Now, if that happens, i.e. we go back, the auto industry and the factories start going, capacity utilizations go back to about 80-odd%, then you're approximating what is now being touted as a 90% economy. If you're 90% there, yes, different sectors behave differently. Then you're pretty much, then it becomes a question of what are these various fiscal stimulus measures that can be offered by the government to take the economy to a normalized path. So I think that will largely be the trajectory of the auto industry, whether it's right from two-wheelers to commercial vehicles.
Okay, fair enough. That's the outlook coming in on autos. But share with us what your view is when it comes to the capital goods space as well, because one tends to be a little bit circumspect, largely on account of the execution challenges, the lower ordering as well. And for some of the companies, they may now have to be contingent on smaller or medium-sized ticket orders coming in vis-a-vis large orders due to the COVID impact. Even companies like L&T have been refraining from giving any sort of a guidance. What's the long-term story when it comes to capital goods? Where are you placing your bets here?
Now, if we talk about, or India talks about the Atmanirbhar story, then it's all about infrastructure, healthcare spends. And these are the two areas which are vital to any economy and where India woefully is inadequate. And that, fortunately, is also the push of the government. So if when they announce their policies, there is an acceleration, and that is the key. There needs to be a stimulus measure. It can be a fiscal stimulus measure leading to higher fiscal deficits. In any case, when revenues are down 30 to 80%, you are going to get a big fiscal deficit. But if it's going to have a multiplier, infrastructure has a huge multiplier effect, because you're laying a road from Delhi to Bombay, then you create jobs all along the stretch from Delhi to Bombay. Different states benefit. Employment creates income. Income creates tax revenues for the government, and the multiplier effect is higher than one. So if that, I think, is the promise for the industrial sector, which has still largely been lacking. Now, you mentioned L&T. L&T trades at a multiple of like 12, 13 times. For a company which is the market leader and has 25 to 30% of all orders, infra orders that go to L&T, it should be trading at a far higher multiple. Now, so I think will largely be the focus of the government when they announce their fiscal stimulus measures. And so I think, companies like L&T, like, KEC, in the mid-cap space, are the companies to focus on.
Okay, Chakri, we've talked about some of your preferred plays currently in the markets. But if you had to pick your top three right now, what would they be? And would you also be rotating, your picks given the kind of churn we're seeing in the markets, or holding steady with the top three there?
I think we're fortunate that we got IT and pharma right early on in the cycle. I think that as a sector will continue to hold on. I think there's a lot more momentum, business momentum left. So the fundamentals are very strong. And outside of that, I think, the other sectors, the lagging sectors, which is the consumer discretionary, infrastructure, and third, financials in that order, I think they are likely now to begin to show business momentum. Then why will we see business momentum is because look at capacity utilizations. A very important number that we focus on. They're all trading at 40, 50% capacity utilizations. Now, those kind of numbers are not sufficient to run factories, and not sufficient to pay salaries for their employees. And those numbers in India, whenever they hit about 80, 85% plus, it results in capex. So we're still ways off before any capex-led recovery happens in the market. So then what I think we will see is a jobless recovery, i.e. there'll be higher profitability for these companies, not necessarily profits. Higher profitability means if they were making a 15% margin, they'll now make a 20% margin. And that will aid, because whether it's lower earnings, a lower margin contributing to EPS, or a higher margin contributing to the same EPS, is earnings, however you look at it. So I think that is the delta that you will see in consumer discretionary in some of the deep cyclicals like infra.
Right, sure. Chakri, what one is seeing play out today is some massive correction, and this is not just for our markets, but across global markets as well. As I'm seeing on the screens, Dow futures have plummeted. You're seeing the European markets as well, open up with sharp cuts. If you had to really protect capital, would you say take profits off the table when it comes to IT and pharma, or do you think these are long-term growth sectors you would manage to sit tight and wait through the storm? Is that your advice to investors?
IT and pharma would continue to stay put, because if you take IT as a sector, still you take whether the leading companies, Infosys, TCS, HCL Technologies, they all are trading at fairly reasonable multiples given their earnings visibility. It's fairly visible earnings in terms of the order momentum that you have there. Now, pharma is coming off fairly depressed earnings over the last couple of years and increased approvals. If you look at, for instance, even Lupin, now that stock is outperforming today. The outperformance is coming from the fact that some of its products like metformin is going to be launched in the near future. You didn't have such launches a year or so ago. So as these launches translate into revenue, then the multiples start looking more attractive than they were, let's say, some time ago. So I think, yes, so IT and pharma, we would continue to hold. These are rotational mini profit takings that we see, but we would continue to hold.
Chakri, owing to the fact that we've seen a lot of traction come in those precious metals, the way gold prices as well have shaped up, do you believe that companies closely linked like gold loan companies, etc., could stand to perform well?
Indeed, if you look at the gold loan companies, Muthu, and the likes of them, their LTVs are still very reasonable levels. I mean, they're still standing at about 70% for fresh loans. And for the existing loans, clearly with gold prices having gone up so much, the LTVs are very, very comfortable. They're probably about 50-odd%. So for the existing loan book, looks exceedingly safe, even taking into account that there can be a gold price correction. And on the new book, which is 70%, I still think there's a degree of safety. So, and that is probably the most secured of all various kinds of borrowing, because here you have a unique situation where the borrower has actually an interest in coming back and closing the loan and taking his or her jewelry back, and which is not so in the case of some of the other smaller ticket loan items given out by other NBFCs or banks. So from that perspective, I think given the current environment, the gold loan companies both will see strong asset growth as well as their valuation multiples will hold up.